Hi, everyone. Thank you for joining us for our Cash Management Toolkit webinar today. I'm Cindy Lakshmanan, SVP of Development Services at OFN, and I'm joined today by Eric Hangen, a principal at I-Squared Community Development Consulting, Rex Fowler, the CEO of Hartford Community Loan Fund, and Dwayne Shipp, the Director of Finance and Neighborhood Housing Services of Chicago. I'm going to start with some housekeeping tips and brief background info before turning it over to our presenters. In terms of housekeeping, I note that we are recording this webinar. We have allotted 15 minutes at the end of the webinar for audience questions. With that said, please feel free to submit any questions you have in the Zoom chat as they occur to you. We also encourage you to use the chat function to introduce yourselves, share comments, and interact with other participants. And we also ask that you please remain on mute until we get to the Q&A section. And so, next slide, please, Roland. So first, I'd like to start by acknowledging our sponsors, Capital One and Fifth Third Bank, whose funding provided us with the support to develop the resources for CDFI Growth tools and webinar series. And then next slide. Over the next few weeks, our resources for CDFI Growth webinars will highlight new toolkits OFN has developed to support CDFI practitioners, like many of you joining us today, in maximizing organizational sustainability and impact as your organizations grow. These tools were developed in response to feedback we've received from our members that would be helpful to have best practices resources on a variety of topics. We have heard that feedback, and there are currently 3 toolkits. The first is our Cash Management Toolkit, which is the focus of today. Next week, on Wednesday, September 21st, we'll be sharing the 4 Essential Pillars framework, which is a concise, practical handbook that covers the core elements of every CDFI's business model. Finally, on September 28th, we'll be discussing our loan policy toolkit, which is designed to help CDFIs create, refresh, or rewrite their loan policies. And while all these toolkits are designed specifically for CDFI loan funds, they can be adapted for CDFI credit unions, banks, and venture funds as well. And then next slide. Here you'll see the components of our cash management toolkit, which includes an overview guide on how to think about effective cash management, a webinar recording that provides frameworks and guidance for CDFI financial analysis and business planning, and finally 3 starter Excel tools, each of which has a user guide and an Excel model to assist with cash flow modeling and asset liability matching. And next slide. You can access and download the cash management toolkit and others as they get added on CDFI Connect. So once you log into CDFI Connect, you can navigate to the resources and then OFN resources tab and click on the OFN resources for CDFI growth folder, where you'll see the cash management folder to access and download the tools. So if you're joining us live, we're sharing a link to the overview document in the chat, which includes links to each component of the toolkit. If you don't have a CDFI Connect account, you can join for free at the link noted on the slide, which we'll include in the chat as well. And so with that, I'm going to turn it over to our presenters, Eric, Rex, and Dwayne. Eric is going to walk you through how to best utilize this toolkit, while Eric and Rex are going to share their take on how and why they implemented financial projection tools to strengthen cash management practices of other respective organizations. So Eric, over to you.
All right, thanks, Sindhu. Hi, everybody. So my role has been just as a consultant working with OFN to develop some of the tools that Sindhu just mentioned in the toolkit. I guess what I do, who I am, I'm a community development generalist and long-term practitioner. I've been in the field for a little over 25 years now, and I've had the privilege of working with a number of CDFIs over the years, doing strategic and business planning, and also a lot of financial analysis and modeling. So I really just took advantage of this opportunity to brush up a few tools that I like to use with organizations and make them available to all of you, so that you can take them and adapt them and use them for your purposes. So I'm just going to kind of give you a super quick tour of some of the tools, so you have just an idea of what they do. But as Sindhu mentioned, all of them have really extensive user guides that we develop, so sort of like line by line advice. And I won't walk you through. We won't structure the webinar sort of like a training on how to use these tools. We've tried to set them up so that they are all things that you should be able to kind of like download and just start using. And there is also sort of a among the components that Sindhu listed, there's a cash management guide document. Actually, Sindhu, I don't know if you even want to go back like a slide or two to that list of the components, if you're able to do that. Yeah, that's that item number 1 there. Like read that one first when you get into this toolkit, and it'll sort of walk you through everything else, all the other 7 things that are on that slide, like what they are, for whom they might be useful, what their limitations are, because they all have limitations, some other tips for how to use it, and then you can kind of figure out which other components of the toolkit you really want to get into. So I guess just a few broad thoughts on financial modeling and cash management. So I was asked to create cash management tools. So the main tool, like if you're just trying to know what your short-term cash flows are, it's probably that number 4 on the list, the simple cash flow model for CDFI Loan Funds. And I'll show you that in a minute. It's a month by month cash projection to go out 18 months and sort of make sure that your organization isn't going to run out of cash. It's really, that's its main use. But we also have another product that we put in there, which is a single loan product model, which is number 5 and 6 on this list, that are more of a tool if you want to do a feasibility analysis of a particular product. There's a lot of other kinds of models that you can use. Oh, I should mention the third set there as well, numbers 7 and 8 on Sindhu's slide here, which is sort of an asset liability management tool, ALM, just to compare whether the loans that you've made are going to be maturing sort of in sync with the debt that you owe or not, and sort of whether or not you might have cash flow issues because they're not matched up. So those are the 3 things that the 3 types of tools that we've included. There are a lot of other ways to think about financial modeling and uses for financial modeling and other financial modeling templates. And we aren't discouraging you from using any of those either, including you might have other consultants that you'd like to work with, or maybe a peer organization, has put out a tool. I'd encourage you to really think first about what your needs are, and then try to find a tool that works best to meet that need. And you just keeping it really honest with you, you might or might not find that any of these 3 tools meets the need that you have. So what kind of needs might you have that relate to financial modeling? So one is, okay, I just want to be on top of cash. I mean, I worked with the CDFI once, who shall remain nameless, who stopped lending once because they thought they were going to run out of cash to lend, and they actually had lots of cash. And so they sort of shot themselves in the foot, right? Because they didn't have a good tool to sort of predict, like, oh, actually, we're going to be fine because we have all these repayments coming in, or this grant's about to come in, right? They kind of didn't do the math. They just looked at their bank ledger and was like, oh, we got to stop lending. And they were actually fine, right? So there's that kind of sort of just, am I going to have enough loan capital to lend, or am I going to have enough operating capital? Actually, one of these tools is sort of a souped up version from a tool that I first did just as a kind of a volunteer project during the pandemic. When the pandemic first hit, people were worried about, hey, can we keep the lights on? If people stop repaying their loans, will we even have operating money? So you might have questions like that, but you might have other questions like, you want to think about a new loan product. Is that a feasible loan product? You might want to be doing capitalization planning, like how much money do I need to borrow over the next year, or over the next 3 years or 5 years? Or you might be trying to do more comprehensive business and strategic planning. And I've sort of found that depending upon what kinds of questions are really most important for you to answer, you will probably end up wanting to use a slightly different kind of model. Let's see. So I was just going to show you 2 of the tools really quickly, like not actually row by row, but just kind of like, here's what it looks like and here's what it would do. Sindhu, how am I doing on time so far? Like, give me a quick, okay, enough to do that? Okay, so I'm gonna try to share my screen. And show you just the simple cash flow model. So this is the tool that I mentioned that you could use to just sort of forecast in the relatively short term, like over the next 18 months, will we have enough cash to operate? Will we have enough cash to lend? In addition to the very detailed guidebook that comes in Microsoft Word with every tool, there's also like a little tab in the Excel document that has sort of a brief set of instructions that you can refer to quickly without having to click over to another document. So what happens in this model is you enter in information about the lending you're doing. You know, you can divide it up into products, and I've got this much outstanding in this loan product, and I'm going to make this much more of this kind of loan product, and here's the interest rate, here's the typical term of the loan, here's the money I expect to come back in, here's how I expect the loan to perform. So you enter kind of all that information on this tab. You get to a capitalization tab where you can talk about what kind of money you're borrowing, and you know, I'm from different kinds of loans. You know, can have interest-only loans that mature into a bullet payment or balloon payment. You can have level payment debt. And there's even some sort of flexible, because a lot of CDFIs have really funky debt, like, you know, has very specific rules about how it's going to be repaid, and you can kind of create your own flavor if you want. And then you enter in some information about your operations. You can enter in some information about restricted funds management, sort of the back and forth between funds that are restricted and unrestricted. And it basically churns out an unrestricted cash flow document, plus a one-page summary that you can share with your board. So that's sort of the basics of that. There are a lot of limitations to all of these tools, just as a reminder, and the limitations to this tool are all discussed. I won't go over them in detail on this webinar, but they're all discussed sort of upfront. So it's a good tool to use if you're really just honed in on short-term cash flows. Probably not the best tool for like product feasibility analysis or strategic planning. The other tool I will show you very quickly is a single loan product model. Gosh, is that showing? Yeah, okay, it is. Cindy, do you see the brief instructions now for that? Just confirm. Okay, great. So again, a brief set of instructions. So this is if you have an idea for a new loan product and you want to see if it will work, and how much money would you have to raise to cover it, or will it sustain itself or not? Those kinds of questions. It can also be useful like for funding applications, you know, if it's going to be around like just or including applications for debt, and you want to share with a prospective investor or donor just the information about this one product and not about your whole rest of your organization. This has been useful for me over the years for that. There is one huge limitation that I will mention this one up front, is that this model is set up, the single product that you can model has to be an amortizing loan. So I don't have a version yet for like bullet loans or something like that. So I know obviously there are many CDFIs that don't do that, you know, for whom a regular amortizing loan is not the principal product. So hopefully the suite of tools will keep growing over time. So here in this model, you enter in information about a loan product, like what's the design of this asset, what will it cost you to operate it, how many loans are you making in the quarter, just like into these yellow colored cells here. You enter in some more information about like how you want to borrow money to capitalize the program. And then you get both like a super detailed quarterly set of projections and an annual set of projections. You get like an income statement, a balance sheet, and a cash flow statement. So the other model only gave you a cash flow statement. This gives you the sort of the works, but only for one product. So Rex Fowler, when he comes on, we'll talk to you about some modeling that we've done together where we actually modeled his whole organization and all of the balance sheet and every single loan product and all of its operations, by business line. But that's a difficult model to just sort of paste a template, dump a template up on a website and have somebody be able to download it and just work with it. So that's the you can make much more powerful models, but they're much less user friendly. Like it's sort of like there's like almost a directly inverse relationship between power and user friendliness when you're working in Excel. Let's see. So that's the basic set of tools. Maybe Cindy, should I try to show the ALM tool really quickly as well?
That would be great. We have time.
Okay. Let's see if I can find that. Okay, here we go. So it's funny. I have to first find it in the Zoom share thing, and then I have to find what I'm actually sharing among the layers and layers of documents on my desktop. Okay, so do you see the little graph with the, okay, great, cool. So this tool, actually, I do not take credit for it. This is a tool that another consultant, Lisa Wagner, worked on along with some OFN staff who have developed this. And I think, am I right to do that some of this is used, in fact, when CDFIs are reporting to OFN? So you may have seen this tool or something very similar to it anyways, if you've reported to OFN about your weighted average maturity of loans. But so what you do in this model is you have sort of one tab where you can kind of list your whole roster of loans and what was their term, their original term, and then what's their maturity, remaining maturity, and it spits out what's your weighted average term and weighted average maturity of your loans receivable. And then you do the same thing on another tab with your notes payable, you can create this big roster of like every note payable you have, and it'll spit back out the weighted average term, weighted average maturity of your notes payable, and then give you a little graph to kind of compare that result. And if you can see if the two bars aren't perfectly lined up, then you have some kind of mismatch, right, that you'll want to manage. All right, so that is that's a quick overview of the tools. Again, remember that there is both the sort of an overview guidebook that gives you more of a conceptual framework. So I'm not trying to like dump a lot of concepts on you, in part because there's a guidebook that you can read that gets into that, and there's a recorded webinar that I did. I can't remember how long ago it was actually, but
Last fall.
Yeah, okay, not too long ago. That kind of walks you through sort of concepts to think about, like if you're a CFO at a CDFI, or if you're a CEO and or lending director and want to get sort of just a grasp on how should I be thinking about my corporate finance as a CDFI. You can get some of that sort of framing in those two resources. Okay, so I think we're gonna move along. Yes, okay, Cindy's telling me it's a good moment to move along. And so I'm gonna introduce Dwayne Shipp first. He is the CFO of Nhs of Chicago. And we worked together on a financial model that was sort of similar to that cash flow, the first tool that I showed you, and he can talk about their organization's experiences using that and other sort of thoughts that he would like to share with you about how to get your hands around this kind of stuff. So take it away, Dwayne.
All right, well, thank you, Eric. Good afternoon, everyone. My name is, as Eric said, Dwayne Shipp. I'm the finance director of the Neighborhood Housing Services of Chicago. So we are a under $30 million non-for-profit organization with a CDFI component. So, as I begin to talk about or speak on today's topic, cash and cash flow is really the life's blood of our organizations, and especially a CDFI. So to successfully monitor cash, we were looking for a model that accomplished four main goals for us. One, it was easy to use and understand. That kind of goes without saying. Two, it has to address the critical areas of unrestricted cash, sources and uses of cash on a periodic basis. 3, it has to allow for the creation of different cash flow scenarios within the model's parameters. You don't have to blow up the model just to change an assumption. And 4, to allow us to provide feedback to staff and the senior management. So that number 4 was critical because we have to support our users in this effort. So just starting quickly with our lending operation. The lending operation, as you all know, requires that we strictly manage capital, especially small CDFIs. This cash management can be challenging at times, but however, the cash flow model allows us to do this. So on a monthly basis, we can estimate originations, loan runoff, prepayment speeds and assumptions, charge-off, delinquencies, and in our lending activity in particular, loan sales are necessary for NHS to raise our lending capital. So therefore, we have to match and anticipate our capital needs with our capital sources. And often we time our loan sales with our capital, with our cash needs. And these were made obvious by the cash flow model. So that's one element of this model that helped us a great deal in managing our cash. So on the other side is the financing. So in order to aid NHS reach its capital needs, we have taken on debt. So the model allows us to track periodic P&I payments when they're due, given any balloon debt payments. We can determine whether there'll be sufficient cash available to pay down the debt, and if there will be any lingering effects on our operations, including our ability to continue as a going concern. So we may have the sufficient funds to pay down the debt, but how much of an effect is that going to have on our organization moving forward? So the cash flow model gives us the opportunity to identify our cash risk and where that cash risk is in the organization. And it also allows us to preemptively plan a course of action. So because we're projecting out a few months, we have time to prepare and plan for any potential negative effects, which may entail drawing on a line of credit, establishing a new borrowing facility, which includes different tranches of debt. So the cash flow model helps us frame the discussion in these areas. And we can and do create different cash flow scenarios. So one exercise we did was to shock our business and assume that we lost 40% of our operating revenue overnight. And while in the short run, the expenses were only marginally affected. So we were able to use the cash flow model to frame this issue. And the data output from the model is clear and concise. And it also gives the non-accountant / finance person a visual of cash needs of the organization. So, and I found that it's these non-finance people who oftentimes bring a refreshing perspective to the discussion. So you want to make it easy as possible to loop them in on your cash flow discussions. And from an operations perspective, we review the sources and uses of funds. So in that cash flow model, there's a section on operations. So we look at all the cash in items, the lending interest, loan sale revenue, because hopefully we charge a premium on the loans that we sell, any fee income that we generate. It also allows us to monitor the receipt and timing of contributions and grant revenue. And also our business is heavily entwined with the city of Chicago. So we have a number of city contracts that we are perform for the city. So we're looking at how those cash items come in and come out of the organization. So on the cash outside, of course, there's payroll and benefits. I don't know, our organization, there's probably about an additional 20% in benefits on top of the payroll expenses. And as we all have occupational expenses, loan servicing expenses, just general operating expenses that we have to monitor the timing of when those expenses come in versus when our revenues come in. Because in our business, we find that the revenues the expenses are always timely, they're easy to predict, and we have no problem in knowing when we owe somebody. But on the revenue side, that can be a little tricky. Sometimes there are timing issues. So we have to make sure that we have sufficient cash to continue operations. So the model generates this level of detail, which allows a senior management the ability to make a number of executive decisions. And as I just said, in terms of the timing of cash payments and whether we'll reach a point where we may have to pull one of these financial levers that we have in place for such a need. And then finally, on the results page, starting with the unrestricted cash. So it takes the unrestricted cash, it adds the sources of funds, details the uses of funds, and then it gives us what we ultimately want is the conclusion concerning the cash flow. So as I said earlier, we were looking for a model that accomplished four main goals for us. One, it was easy to use. Yes, the model is very easy to use. It's intuitive. It makes sense. It covers all the critical areas of cash sources and uses for us. We can go in and shop the model, create different cash flow scenarios, and then it provides immediate feedback to our senior management. So when you add the macroeconomic factors, interest rates, supply and demand of housing stock, the model will help you, is a great tool when you're considering those kind of make or buy, green light, red light decisions that each organization has to make. And finally, we also use the model for budget presentation. So we were able to take our budget and just layer those numbers onto the budget because we're primarily a cash basis kind of organization. We were able to put all those numbers in the model, which gave us a good indication of how our cash would flow. So just to end, hopefully with some levity, it's kind of a technical subject. It's got a good beat and it's easy to dance to. So that's all I have.
Thanks, Dwayne. One thing I might add is that, so Dwayne and I worked together to do a fair amount of customization for Nhs of Chicago, like compared to the model template as it exists on OFN Connect for you to download. And you are welcome to do the same. So like Dwayne mentioned, there are some particularities about their business, like, for example, the fact that there's a lot of contract revenue with the city of Chicago that was sort of really important to monitor. So we added some rows to the model that just had to do with how we were forecasting that. And all of these models are open source so that the worksheets are protected if you download them, but you can unprotect them without a password. And then, you can change whatever formula you want. So, for now, we'll maybe get in towards the end of this webinar if we have time. We talk a little bit about, how to, like, who you want to be doing that kind of work, and how to think about that when you want to customize. But in most cases, some level of customization will probably be helpful. So I will turn it over to Rex Fowler now, who's the CEO of Hartford Community Loan Fund. And Rex actually worked both with the same kind of cash flow template during the pandemic, but we've also worked more extensively together on a very robust financial model that projects all aspects of the organization, just so you can get a sense of more broadly like things you can do with financial modeling. So we're going to hand it over to Rex now.
Thanks, Eric. Yeah, so just a little background on our organization. We're based in Hartford, Connecticut. We primarily do affordable housing lending, construction rehab loans for small minority developers who are buying and rehabbing residential or mixed use properties, primarily in Hartford, but we can lend other places in the state of Connecticut too. We didn't start out as a housing lender though. We really started doing small business lending and some second mortgage home improvement loans. We started transitioning out of those lines of business probably about 10 or 12 years ago, I think, and realized as we started to make that transition into the construction rehab lending that we weren't doing a very good job about figuring out what our revenues were going to be in the upcoming year. So we really were looking for a tool to help us get a better grasp of our budgeting process. We had a pretty good sense of how to estimate our expenses for an upcoming fiscal year, but especially as we moved into this line of business where, you know, in construction lending, the advances go out over time. And so for some of our loans, you know, it could be 12 months before we fully advanced our commitment. So we needed a model that could incorporate those kind of fluctuations in how we disperse funds and also how the funds came back. So, you know, the construction loan would be interest only for a year or 2 years. And then when the project's fully rehabbed and leased up, then we convert it to an amortizing loan. So we need to have that capacity to convert the loan into the amortizing portion of it. So both for budgeting and also for longer term planning, as folks who are, you know, I'm sure a lot of folks on this call are working on the ERP application for the CDFI fund, and the CDFI fund, as everyone knows, wants to see your projections and how you're kind of proposing to utilize funds from the CDFI fund into your business plan for the upcoming years. And we had tried to patch together a little Excel spreadsheet on our own for prior CDFI fund applications, but it was becoming kind of a nightmare as we tried to make it a little more robust every year and get a little more accurate. And we were just kind of failing on our own little tool that we had put together. So about 10 or 12 years ago, I attended a NeighborWorks Training Institute and met Eric, who was introducing the larger model to CDFI practitioners there at the NTI. And to be honest, it was a little overwhelming. It's a lot, as Eric mentioned, the bigger organizational model is kind of a lot to take in. And I think there were maybe a couple of training sessions to try to get you grounded in it. I wound up coming back another year for a refresher course. And then I smartly delegated the model to our chief operating officer, who is actually much better about spreadsheets and Excel platforms than I am. And, you know, we've really made him the expert in the model. So over the probably 10 years that we've been using the model, we've learned that there needs to be one cook in the kitchen. And that cook is not me. When I got involved in trying to, you know, think, what if we introduce this product, or if we did this, and I try to go into the model and make those adjustments myself, I would kind of invariably screw up the model, because our COO is the one who kind of understood where the inputs went. There's probably 12 to 15 different worksheets within the bigger organizational projections model. So we've really had one person on our staff become the expert, and he's really in charge of utilizing the model and for the purposes that we need it every year. We don't use it, you know, Dwayne mentioned using the model for their model for really monthly projections. We don't really use it in that way. We really again, try to focus on, we engage with the model every year in our budgeting process, and it really has helped us much better predict what our interest and fee revenues will be on the loans that we're projecting to originate, and for the way that we're anticipating advancing funds under each of those loans. It's also been really helpful in that longer term planning. So we're working with it, this week for our ERP application coming up. Any funder that looks for projections, anytime we're doing strategic planning, we're engaging with the model. We're also using it now, though, for our capitalization strategy. So Eric mentioned that earlier, but it's been really helpful for us to know, okay, if we do X million dollars in this loan product in the next 1 to 5 years, how's that going to impact our need for external capital based on the payback assumptions that we have incorporated into the model? How much can we count on getting from our existing lenders, from the CDFI fund, from other sources of equity capital that we kind of incorporate into the model? And it's been really helpful for us in anticipating what our capital needs are and going out to the market to try to secure those sources of external capital that we think we're going to need. Then the last thing I'll mention that Eric touched on, it's been helpful for us in sort of looking at the potential financial impact of new products. And we've tried to play with the model a couple of times and look at, okay, what if we wanted to do a fix and flip product within our construction rehab loan program? And if we think we're going to originate X number of these over the next year, and based on the amount of time that those dollars will be outstanding, what will the effect of that be on our self-sufficiency ratio? That's one of the big focal points of our board is, how does our self-sufficiency ratio look for the next budget year and then over the next 3 to 5 years? So using the model really helps us kind of play around with different products, see the effect that would have on our balance sheet and on our P&L, and make some strategic decisions based on how we see the effects of that. The last thing I'll mention, that it really has been helpful to work with a model over an extended period of time, because as Eric can vouch, we have tweaked the model pretty considerably over the 10 or so years that we've used it, and we've refined it. In the early years, we found that it wasn't really, we were kind of missing our, even if we would hit our origination goal that we had incorporated into our projections, we were off on what our balance sheet looked like and off on what our P&L looked like. So we've been able to tweak the model and kind of drill down on where we were off in our assumptions. So maybe, we had to estimate what our prepayments would be on our portfolio, and that's a little bit of that's a guessing game. So, but we were realizing that we were pretty far off in what our assumptions were on that. So we were able to tweak those in the next year, and we've been able to tweak some other things in terms of our personnel expenditures and make some other revisions, customize the model in a way that's made it much more accurate in how our projections look versus our actuals when we actually hit our assumptions. And it's become a much more valuable tool over time as we've used it more and more. So it really has been a real game changer for us in being able to more accurately project what our organization is going to look like in future years and what our needs are going to be in future years. So that's it from me.
Awesome. Thanks, Rex. I just wanted to reflect on one thing listening to you that I'd mentioned to folks too, because I'd said if we had time, we might talk a little bit about like who to engage or how to wrap your head around this. And Rex, you mentioned with your modeling work, there's only one cook in the kitchen, and it's not you, it's your COO. And interestingly, it's a COO, not actually the accounting staff. But also, if you were listening to Rex, he might not be the cook, but he's spending an awful lot of time, tasting the product kitchen. So he's really engaged in the process. And that's if I were to highlight anything about financial modeling, and actually Dwayne, in your case as well, when we were working together, you were working very, very closely with the director of lending at NHS, to populate those assumptions. So in terms of who's actually sitting down and keying stuff into the model, I definitely think it's right that you want one person who really has taken the time to get to know how it works and who can make those tweaks and kind of, I like to call it the keeper of the flame. There's like no version management issues, and they know exactly if they enter a number into row 17 of the model, they know where row 17 goes, right? They've taken the time you do have to actually learn how it works. But it's also really critical to get your team involved, to have these discussions, because modeling by definition it's a forward-looking exercise. So it's not really an accounting function. In my experience, it's actually pretty rare that someone who's mostly like maintaining the books, like they're using QuickBooks or MIP or whatever, and like maintaining the accounts, that person is very rarely the person that you want. It could be, for sure, but usually I don't find that to be the case, that person is the driver of modeling. It's usually either you have a true CFO, like somebody like Dwayne, or you have somebody else, like in Rex's case, it was COO, who's like really handy with spreadsheets, but also grasps the strategy of the business and is able to walk back and forth between the numbers and what the books look like and what the strategy is. So with that, I think, Cindy, we're ready to just take time if there are additional questions folks have.
That's right. Yeah. And so I think now is a great time. Just a quick reminder, if you have any questions, to drop them into the chat. While I give you time to do that, I know that there's been some questions about how you access the tools, and that's something you joined after the beginning of the webinar. So I think right now, really quickly, we're going to kind of go over that again about like how you can access the toolkit on CDFI Connect. And in the meantime, please feel free to put those questions in so we can get Eric, Dwayne, and Rex's take on those things. So when it comes to accessing the toolkit, again, you can access it via CDFI Connect. If you're not already a CDFI Connect member, you can join for free at the link noted on the slide. And then you navigate to resources, and then on that drop-down menu and select OFN resources. And then once you get to OFN resources, if you look on the left side of the page, you'll see a tab that says OFN resources for CDFI Growth. You hit the plus sign and you'll find the Cash Management Toolkit folder. Again, I apologize for the mix-up on the single model cash flow Excel tools on that tool. We got it fixed. And so if you look at the link that Alba just shared in the chat, the last one does get you to the Excel model. And so hopefully we will get that taken care of, and we appreciate your patience. And so, yeah, I guess we can jump to questions now. And as we're waiting,
go ahead, Cindy. Yep, I saw one come in, but go ahead.
Yeah, I was just gonna say, I think we can answer that one, but just in general too, like I know, and then kind of like when we were putting together the toolkit, we talked a lot about kind of like, wanting this to be accessible, and kind of, Eric, you noted that you want to, like, there's a trade-off, right, between like making these simple and like a tool that everyone can build off of versus like adding more complexity to it. And so kind of maybe just giving kind of highlights of like situations in which like, you can start using this tool, right? And then in which cases you might want to kind of bring in someone to help, or what kinds of skill sets you might need as you build out the model.
Yeah, again, and it seems like I think there were a fair number of people who joined maybe late enough in the webinar that some of my initial caveats. So like, I think this is a very helpful set of tools, but it's not the only set of models that you might want to consider using. And there are, your peer organizations will have models. There are a number of consultants out in the space who have models. There was the model that Rex mentioned from the NeighborWorks Training Institute. OFN itself had a model, a financial projections engine decades ago that's actually still pretty good. So there are a bunch of other tools, and find the one that you need. So James has a great question. As a new CDFI director for a loan fund, what is the first tool that you would suggest I tackle? and I hate to get all sort of Yoda on you, James, but I would want to know, what are the big burning questions that you have about your organization? Like, what challenges are you trying to manage? And I don't know if you would agree with that, Dwayne. I saw Dwayne nodding, so Dwayne was like, yeah, right on. But so depending on that, I think it would so you're a new director. I don't know if, for example, if your loan fund was new, I will say this much. I will, at least to try to give something a little bit more concrete. If you are running significantly below 90 days cash, or if you anticipate any, real risk of significant shocks, like, oh, we could have a whole portfolio of loans that I just don't know if it's going to repay, or the local bank might call in our note, or we're not sure whether they will. If there's if big events like that could potentially happen over the next year, then I would start with the simple cash flow model, because then you have a cash management issue, right? Like, or if you find that your organization, like the organization that I mentioned in the story that I told, it finds itself sometimes like freaking out about whether it has enough cash to lend with, then the simple cash flow model would be my place to start. I think it's very easy to use relative to other, or at least it's very easy to understand. I will say that sometimes you might have to do some work to be able to to input, to actually find the numbers to input, because the model will just say, well, tell me what your expected principal repayments are for this loan product. Then you have to go do the work to figure out what the expected principal repayments are for that loan product. There's no like formulas in there. So, what are you going to do? Are you going to look at your servicing software? Are you going to build a side spreadsheet to predict that? You're going to have some work to do, but it's simple to understand conceptually. So that's probably a great spot to start. Yeah. And James, it looks like your loan fund is a relatively small, like if you're a SICA, small and emerging CDFI category, CDFI, then probably cash flow management. But also if you're growing a lot, then, and if you happen to be fortunate enough that the loan product that you're considering growing is in fact a regular amortizing loan, the single loan product model is also really useful and also much easier to use than the the sort of big kahuna, we're going to project our entire balance sheet, revenue expense for every business line model that Rex was talking about, that Rex and I worked on, and that they've continued to refine over 10 years at Hartford Community Loan Fund, and which, many, I mean, there's probably several dozen CDFIs that I've worked with who use that model now, but that is a heavy lift. And like most, a smaller organization would almost certainly need consulting help to build that kind of projection. And for larger organizations, it's still, you're devoting a lot of someone's time to doing it.
Thank you.
Sure thing. Who are consultants that can help with this? OFN does have a consulting directory, right, Sindhu, where people could look, they could look for resources, I think. Because I know I'm in it.
On CDFI Connect, yeah.
Yeah.
There's a list on CDFI Connect, but I think that we're working to update it. So stay tuned. We'll have, there's a list, but it'll be kind of refreshed.
Great. Mark was asking, if you're using the old OFN financial projections engine, to which model would you recommend converting? Again, that sort of depends. Like, I don't think that's such a bad model myself. Like, it's just sort of whether it's working for you and in what ways is it not working for you if it's not, because like there's some question, like it's either, oh, it's really cumbersome and I want something that's easier, or I want a more concise, shorter term cash flow projection, or I just want to be able to focus on one product, or I need the model to be able to do much more, like depending upon like where, because basically no matter what model you put out there, someone will see a shortcoming in it. Like models are an abstraction from reality. And so therefore, by definition, if somebody's focused in on like a particular part of reality, that any given model may or may not capture what they want. So really, there's nothing wrong with the old OFN model, and it's just, you know, if it doesn't work for you, then here's some additional tools that you could access. Okay. Brian had a question about where that old model is, and I actually, you know, I'm afraid I don't know the answer to that.
So with the older resources, I think that we have a number of things still up on CDFI Connect. So that's where you can kind of go to access it. With some of the older stuff, we're looking into kind of refreshing it. So our development services team is a new team. You'll learn more kind of at conference about what we're envisioning and how we're building this out over the coming years. But before we kind of repose anything that we've kind of had for many years, we just want to kind of look at it again to make sure that it still reflects current kind of business practices and models. And so with the old model, I think when we feel comfortable with it, if we do, we'll put it out, and if not, then we'll kind of look to build other models that are kind of better for the times.
Great.
Awesome. We got any other questions? Any parting words of advice from Eric, Dwayne, Rex?
Well, I could just say briefly that, you know, my experience with working with Eric was also, you know, we had a task to perform, but it was also a learning experience. So I would suggest that any one of you that are interested in using these models, not only use them, learn them, but for your staff, it can also provide them with, you know, value training and learning about how we approach some of these decisions in terms of cash flow, in terms of creating lines of credit, in terms of funding loans. And it's really the whole exercise and process can be a great primer for your staff.
Yeah, and I'll just add to what Dwayne was just saying, and kind of going back to something Eric said earlier about who's engaged in working with the model. It really has, our director of lending is very engaged in our annual budgeting process, working with the model, and also anytime we're doing strategic planning, longer term projections, he's very involved, as is our accounting manager. And it really has been helpful to have them at the table as part of that process in order to get their buy-in to strategic decisions. So I mentioned earlier about, you know, modeling a new loan product. Well, our director of lending, you know, has had ideas about new loan products based on the feedback he's getting from our customers. But when we incorporate it into the model, if it doesn't work, you know, he's able to see that right now, financially, this product just doesn't work. We can't price it to the point that it does work in a way that's still going to be absorbed by our customers. So it's helped us have more buy-in from our leadership team around strategic decisions that we've made. So that's been a real benefit for using the model too.
Yeah, that's a great point. For strategic planning, I've sometimes used models and then just kind of created like a PowerPoint summary of what the model assumptions and results were, and shared that with boards sometimes to, like, we ran, you know, 5 scenarios, and scenario A had these assumptions and these results, and scenario B had these other assumptions and these other results. And sometimes that was helpful that's been helpful at times for board, even helping boards to focus on certain issues. Great. So I unless there are further questions, I'll turn it over to you. I don't know if you have anything else for us.
Thank you all. So I just want to say thank you, Eric, Dwayne, and Rex, for sharing your experiences and your expertise with everyone here today. I mean, based on the comments you likely saw, but it seemed like there were a lot of great feedback and valuable expertise. So thank you. And then I'll just put a quick reminder in that we have 2 more webinars in the series coming up next Wednesday on the 21st and the Wednesday after that on the 28th. And so we hope you'll register and join us for the next webinars. And then we also did, the links are all fixed and correct. And so you can see that you can access the link that we just shared in the chat with the correct links for all the tools. So thank you for joining us. We really appreciate kind of your attendance and engagement today.
Okay, thanks all.